All right, so we're back for another week at war with the stock market during the pandemic. And I want to get into airline stocks. Airline stocks is one of the hottest topics right now, especially at the tail end of last week when Warren Buffett decided to sell the majority of his shares in Delta. There was previous interviews in January where Warren Buffett simply stated that he would never sell his airline stock. So why did he sell them? What I want to share with you in this video is why I believe he may have sold them, as well as some of the trouble that I think they might be getting into, but also one in particular that I think you should be keeping an eye on because I think it could be an incredible investment during this period of time. So I want to share my screen with you, break down a few of the very important numbers, as well as some of the information that we do know at hand in order to make the best educated decision this week on airline stocks as the stock market continues to fluctuate. This is very important information. So again, I want to make sure that I'm sharing data with you and not just making assumptions. But again, I do have to disclose that this is just my own opinion. So before purchasing any stocks, make sure that you do your own research and make your own educated decisions. So let me share my screen with you and show you a few key pieces of information I think a lot of people are overlooking with the airline stocks and what I'm personally going to be doing going forward, as well as that one airline stock that I think is actually going to be a great investment. Alright guys, now before we get started, I would love if you just drop a comment below and let me know if you over the last couple weeks have purchased any airline stocks, which ones you've purchased, and I want to know what your opinion is, what you might be doing with your airline stocks or any other stocks that you've bought. We're all in this together. It's great to share information. So again, drop a comment below, let me know what you've been investing in, and then let's get straight to it. So obviously, you can see the airlines have been hit hard with the current situation, and a lot of people have been getting in during this time because you can see right here this dip, right? So airline stocks with the current situation, you're not allowed to travel, and there's basically been nobody flying. So obviously that took a huge hit, similar to the cruise line stocks. So you see Delta here, massive hit. You see Southwest Airlines, massive hit. You see United Airways, again, massive hit. Now, I want to get into why Warren Buffett may have sold these and what your position could be going forward, as well as, again, stay tuned to the one that I think is going to be the best airline stock. It's actually going to come at you from left field. You're never going to expect this stock, but I think it's going to be one of the safest bets in terms of an airline stock based on my own opinion. So we come over here and you can see that Warren Buffett sells Delta, made headline news, and everybody's talking about it. So let's get into some of the details as to why that might be the case, because I think there's some important information that a lot of people aren't acknowledging. So let's come over here and look at Delta. So we're in here looking at Delta in Questrade, which is the trading platform that I like to use online. And I want to look at a couple specific key pieces of information. So yes, you can look at the net income and you can see, again, they're making billions of dollars, which is great. But there's one specific line in here that we need to take into account. So that comes back down here. Okay, so common stock repurchase. Now, why is this such a big deal? I'm going to get into that into a second. But this is the 2019 line here. Okay. And based on common stock repurchase in billions, you can see that they spent about $2 billion on common stock repurchase. Now, that might not seem insane compared to the amount of money that they're making. But again, there's one important line that we need to look here, which is the free cash flow. So if we compare the free cash flow, which is about $3.5 billion, to the common stock repurchase, which is about $2 billion, they're spending the majority of their money on common stock repurchase. Now, that's not unique to Delta. That's the same across the board for the majority of the airlines, except for the one that I'm going to share with you at the end of this video, which is why, again, I think it's one of the most safe and sound stocks that you might be able to purchase that's at a massive discount right now for airlines specifically. And there's a couple of other reasons that I'll get into. But again, I think this is something that is really starting to spook people, because at first glance that might not seem too out of the norm, because a lot of companies do this. They want to make sure that they're buying stock at, discounts, or if they feel like their company's undervalued, of course they're going to be buying their own stock and capitalizing on an opportunity to have the majority share of their stocks. But let's look at some of the news that's coming out related to stock buybacks. We see here Trump talking about slamming companies that were using U.S. tax credit to buy back stocks. We can see, they are endorsing stock buyback restrictions. So what they're saying is that they actually, based on the new stimulus bill and some of the other bailout information that's coming with this $6 trillion stimulus bill to help bail out companies, which again, that's one of the reasons why everybody started going into the airlines, because while they were very volatile and while they were very risky, they were included into this stimulus bill. So a lot of people thought, hey, if the airlines are going to dip to basically an incredible low and they're going to be able to get to the point where they can get back up, 500% and make a great return, this is going to be incredible. I can buy low, I can leverage the stimulus bill, and then when these companies come back because they're going to get bailed out by the government, then I'm going to be safe, I'm going to make a lot of money, and I'm going to walk away with a ton of cash during this period of time once things come back over the next year or two. But again, you can see Trump supports banning stock buybacks for companies. Trump is okay with restricting stock buybacks. So when the stock was previously at these points here, okay, so up to almost $60 in certain cases, and then it goes down to something like $20 like it is today. What a lot of companies will do is they'll actually sell their shares, when they know that it's going to be going down, and then they'll buy back low. And then when things go up, of course, they've made their returns and they're in a great position. But the government during the stimulus bill, which is going to be bailing out the airlines, restricts buybacks. That's going to put a lot of investors in a very tricky situation, because buybacks is something that evidently they put a lot of priority on and is something that they want to capitalize on during times like this. So if it starts to get to the point where intelligent investors, like one of the number one in the world, Warren Buffett, starts to feel like this is no longer having the intrinsic value that it previously had, then again, there's going to be some reasons as to why some of these big mega investors, as well as, generic investors that are maybe not trading at the billions of dollars, but millions of dollars, are starting to take a second glance at companies like Delta and their position within them. So let's go back here, and you can see that if we look at some of the information that's coming out, you can see here, airlines are begging for a bailout, but they've used 96% of their cash flow on buybacks over the past 10 years. It highlights a controversy that's going on. And this is an important article that I wanted to share with you right here. So it's talking about Boeing and Delta and some of these other airlines and the problem with this, because at the end of the day, if we come back to the market over here and we start to look at the amount of money that they're making on an average year, so they're making billions and billions of dollars, but based on their free cash flow, they're spending the majority of it on stock repurchases, when right now the big controversy is lying with the fact that if they didn't spend all of this money on stock repurchases, they would have been able to float all of the employees that are now not able to work. They would have been able to potentially hold themselves in a stronger position during this time where they're struggling and they do not have the cash flow to survive. Now, one of the most important things that we need to look at is coming up here, and we'll go to the balance sheet. Now, let's look at this for a second, because I think this is something that's really scaring a lot of people, which is the deferred revenues. Okay, so you can see right now, deferred revenues for these airlines is obviously going to be people that booked their tickets and were going to be going on their flights. The problem is that with $8.3 billion in deferred revenues, these companies might have to pay that back to the people that booked their flights and can no longer go on their flights. So they were making about $4 billion to $3 billion. They were spending about $2.5 billion on stock repurchases. And now this $8.3 billion of deferred revenues that they were likely banking on might not be coming anymore because of the fact that they have to repay people for the tickets that they booked, and due to the pandemic can no longer go on. So this is a big problem that's coming out right now. You've got companies that were potentially misallocating funds without, of course, having this unforeseen situation happen. Now, this is something that's not unique to Delta. It's across the board with the majority of the airlines, but it's even more important to understand that this is really evident in some of the bigger airlines like Delta, as well as if we look at Southwest for a second. And then I want to share with you the airline that I personally think is going to be one of the best opportunities based on the situation at hand. So if we come back here and we look at Southwest for a second. Okay, so we can see that with Southwest, Common stock repurchase, about $2 billion. Free cash flow, $2.9 billion. So they don't even have $1 billion left after their stock repurchase. So again, let's keep this in mind. We've got almost three, we'll use three. So $3 billion for free cash flow. We've got $2 billion for common stock repurchase. And then if we come back to the balance sheet, we've got four. So they're about 4.5 with deferred revenues that they were going to expect to see in the future, which just quickly dried up out of nowhere because of the unforeseen crisis. And now they're banking on the money that they spent buying back their own stock. And now because Trump is going to be, from an investor perspective, limiting the buybacks that are coming into place, I think this is something that's really going to be affecting the investors, and it's going to put the airline stocks in a really tricky situation. Now, let me share with you the stock that I think is going to be one of the best opportunities based on all of this information that we have at hand, and then what I might think should be the positioning going forward with these stocks this week. So the stock that I think is going to be one of the most incredible stocks is Air Canada. So if we look at the last 5 years, again, we can see that they were on a very strong upward trajectory. Now, one thing to note about Air Canada is the fact that it's got an extremely close relationship with the Canadian government. Now, I'm going to show you the financials based on this, which I think is actually going to show you that they were actually very much in a better position in terms of how they were allocating their money in order to keep them safe for unforeseen situations like we have at hand. And even still, even though they were already in a better position going forward, they still, again, have that incredible relationship with the Canadian government. Now, over the last couple of years, like it or not, Air Canada has been putting themselves in a great position. They've been putting themselves in a position to become one of the top airlines in North America as a whole, not just Canada. So even though, again, this is a Canadian stock, it's still an incredible opportunity for people in the United States because of what I'm showing you here. Now, one of the other things to note about Air Canada that I think is incredible is right now, especially during times like this, the CEO isn't taking pay from Air Canada. So he's not taking a salary, again, making decisions that we would like to see from companies like this during times of ambiguity and volatility. So let's come over and look at Air Canada's numbers and see why this might be a better position to put yourself in. So if we come back here and we look up Air Canada, so let's come down here and you can see here that, again, common stock repurchase. Now that looks like an awfully small number compared to some of the other airlines, especially when we see their free cash flow, okay? So $3.68 billion in cash flow. So $3.68 billion in free cash flow. That's more than we just showed you with Southwest Airlines. But Southwest Airlines spent $2 billion on common stock repurchase. Only $373 million was spent on common stock repurchase for Air Canada. So you can start to see a glimpse here as to how they were managing their money compared to some of the other airline companies in terms of how they were allocating their stock fund repurchases. Now, again, if we come back to the balance sheet, we can see how they were doing with their deferred revenues, which is 4. But again, that is a much more manageable number based on how they were tracking their funds up to this point. So I think Air Canada is going to be something that is one to watch for. We can come back here and we can see that over the last year, of course, they were hitting a high of, 52. And right now they're trading at 14 and they're still going to be going down. They actually hit a dip down here of about 212. Right? And there was a low at just over 9. So I think Air Canada, even if you're in the States, is going to be one of the best opportunities from an airline stock perspective because you can see how their money is being managed. You can see how the people in the company are acting compared to some of the other companies, as well as the fact with the relationship with the Canadian government and what sort of position they might be in compared to some of these other big stocks. So hopefully that paints a different picture for you. Again, I think it's important to take note of what some of the information is coming out, because a lot of people are looking at this stimulus bill as just a free train ride to making a lot of money with these airline stocks. But if you don't look closely, there could be some tricky situations that might put you in a different situation in the future than you were expecting. Now, do I think airline stocks are a good purchase right now? One last thing that I have to share with you is the fact that, again, if you're willing to take risk, I think they can still be a good purchase, because if we come here and we look at the fact that, there was a low of 19 and there was a high of 63, there's a great opportunity for a lot of these stocks to 3, 4, 5x your money. But again, I think you need to be educated on the situation and also be willing to take that risk. If they do go bankrupt, or if something happens, they file for Chapter 11, or they're not able to repay people, that's a risk that you're going to have to take. But I think if you mitigate your risk by spreading across a couple different airlines, maybe something like Air Canada as well as Save, which is Spirit Airlines, I think some of these companies, if you diversify your portfolio based on the information we have, you might be able to weather the storm and actually see some incredible returns. And at least that way, that if you do spread yourself across a few different airlines and one or two of them goes under or aren't able to pay back some of the investors, but a couple of them thrive and end up coming out the other end and getting back to, even half of their 52-week peak, then you're going to be in a pretty sound and safe situation, and you're probably going to have an opportunity to make a lot of money. So there's my thoughts. I think, again, it's great to look at how these companies are managing their money. It's great to look at how some of the information coming out might affect some of the people that are involved, especially with large stakes like Warren Buffett, and what we need to do as smaller investors in order to potentially capitalize on the situation at hand. All right, so there you have it. That's my opinion on what's going on with the airline stock. I would love for you to drop a comment below. Let me know if you've purchased any airline stocks over the past couple weeks, as well as what your plans might be going forward, and honestly, what your overall take on the situation is. I know that nobody has the concrete answers, but there's a lot of information that we can dig into to make some sort of an educated decision and put ourselves in potentially the best position going forward. So thanks so much for tuning in. As always, please make sure to like, comment, subscribe, and we'll see you in the next video.